Precious metals like gold, silver and platinum are currently trending on the ASX. Investors now face some pretty stark choices, such as purchasing physical bullion, trading futures or investing in mining stocks, each with its own risks and possibly rewards. For more, I'm joined here at the desk by Dale Gillham, Founder Chief Analyst with Wealth Within Group. Great to see you, sir. Now, gold is up nearly 40% this year.
Yeah, since 1 January, yeah.
And that isn't surprising given what's happening in the world. And
if the Fed cuts rates, it's going to go higher.
Why is that?
Well, the thing is because it's basically gold is a safe haven because of it. And the two things happen when the Fed cuts rates. One is the US stock market goes up, but also gold tends to be it's a known commodity, it's a safe place, but it tends to also push gold up because the currency devalues, whereas gold doesn't devalue. So if you look at
what's weird though in this situation, sorry to interrupt, is it's a bit different from usual because this would be seen as a sign that the US economy is about to have a bounce, surely, because everyone's been waiting for this rate cut, particularly the Commander-in-Chief.
Correct. Well, they all are, and he's pushing for it, obviously, and that's the interesting thing, but gold, he's at an all-time high, and gold is one of those things. I was only chatting to a gold expert about 10 days ago in the US who advises stuff on with the government, etc. And he's, gold tends to rally at around 10% per annum on a long-term basis, so it's a really good thing. Then silver follows it. So gold's at all-time highs. It's up 40%. Silver and platinum or palladium are up the same, but they're looking better right now.
Yeah, it's interesting, isn't it, the silver and the platinum story. But I just want to go back to gold for a sec, because when I ask you the question why, you straight away point to interest rates and the strength of the US economy and what will happen to the devaluation of the currency. But the thing is that right around the world, there's geopolitical tensions in so many places.
Again,
why is the US situation a bigger deal for the price of gold, do you think, than the Middle East on fire, Europe on fire? Questions about what China's going to do next, weird shaped alliances going on in the Pacific. What are your thoughts there?
All of that drives gold, simply because it's safe. People buy physical gold. Countries buy physical gold. So we're seeing a lot more demand for gold because of all of that, because of uncertainty, etc. Interest rates are just a sign of the US economy being, not so great. It's, there's that recession that we don't have, but we're actually having it here in Australia, and it's the same in the US. We can talk it up all we like, but walk down any street and people that we're in a recession. So people love certainty of gold. It's one of those ones that if I've got gold, I'm safe. Interestingly, Australia doesn't have a gold mentality. The US and Europe do, and so does Asia's huge gold mentality.
Isn't that strange, given that half the country was built off the gold rush here in Australia as well? Now let's talk about silver, since you brought it up. Is it just basically the flow-on effects from gold, or is there a separate story happening there?
There's a separate story. Gold has, can I say, finite uses. Silver is pretty much in everything, electronics, you name it. So there's a lot of industrial uses. Same as that as well. So they've all got different uses, and we're seeing this expansion of, can I say, broadly IT, computers, IT, all of that sort of stuff. There's so much more of a demand industrial for silver, and it's playing catch up at the moment. Silver and palladium are both below gold. Well, gold's on all-time high, silver's not. So there's a lot more room to move on that. And it looks really good right now.
If I had $1,000 and I was to be considering whether I was going to put it into gold bullion or a company that mines for gold, where would you go?
That's a good question, because it would depend on the company, because if it's a broader diversified company or a pure gold miner, it's also on the gold price and how much it costs to mine the gold. Generally, buying physical gold is probably better, and so you can do the buy. But then the challenge is, well, what do I do? Do I store it at home? Do I store it under the bed? Do I, go to the Perth Mint and get them to store it for me and buy it off those? So there's little questions around that, or you can do futures, or you can do CFDs on gold as well.
Do you see it as sustainable? Do you see the gold, the silver, the plasma price as continuing to go up, or do you think that this is just a bit of a short burst because of the Fed and then things will settle again?
No, I think there's a lot more legs in all of those three commodities. I think they're going to be driving for the next 1 to 2 years. Because we're actually moving, commodities are going to be driving this boom, both in Australia, so material sector is going to be driving the next boom here in Australia. So I really think these commodities are exciting right now, and for the next 12 months to 2 years, I think they're going to still run very well.
All right, we'll be watching definitely now. A new generation of investors is increasingly turning to artificial intelligence for their financial guidance. The rise of smartphones, of course, Younger people born after the year 2000, we don't even want to talk about them, are particularly inclined to trust AI with their investments, unlike a smaller percentage of baby boomers. And this is a really interesting one because people are turning to AI for everything. Correct. Not surprising that they're now looking for help when it comes to investing.
Well, you're talking about millennials and Gen X. They're about 47% of the risk survey was 47% of them are happy to use AI for their investment advice, whereas about 14% of baby boomers do. And that's partly because of where baby boomers grew up, because baby boomers, we didn't have smartphones, etc.
I would have thought it'd be more than that. I'd think that baby boomers probably have processes in place for investment advice. They already have people they go to. They're already signed up to the emails and the different programs and things. But young people not knowing where to go to what they usually do, which of course is pick up the phone and ask ChatGPT a question.
Well, interestingly, I think it's about 16% of Australians only use a financial advisor. So it's a very low percentage use financial advisors for advice. And the main reason I hear people telling me about is where's the value being added? If they're just going to park me in index funds or index ETFs, where's the added value that they're providing? So obviously from superannuation and estate planning and that, there's advice. That is really valuable for people. So I'm not saying don't use financial advisors, but I'm saying most people think it's costly for what they get back.
Yes, exactly. So it's a return on investment question that younger people think, well, it costs me nothing to ask my phone what the answer is there. But also there's a trust element here too. I would imagine that those baby boomers who are continuing to trust their financial advisors have done so because they've had good ROI. But younger people feel perhaps, I'm guessing here, I used to be one.
I think we both did.
In fact, I think I met you when I was one,
yes.
All those years ago. But you look at the trust factor and it feels like younger people are more likely to trust a device than a person with information.
Because they've grown up with it. I mean, 2007 roughly was the iPhone, and since then, anybody born in 2000s, these millennial babies, they've never known anything else. So they go to their computers to find everything. And the thing is, there was a recent survey about what happens with the cognitive, your brain, basically with the use of AI. Basically, you dumb yourself down. You stop getting your reasoning power. Like people who are older, I'm talking 40 plus, they still ask questions.
Can you say 50 plus, mate, not 40 plus?
Anybody 50 plus will have something going, okay, so why is that? And they'll start questioning, whereas what we do is we have basically a brain fart, if we believe AI all of the time. But it's not something that's new to AI. This has been something that's been going on for hundreds of years.
I guess the thing is that there's been this advice gap, right?
Yes.
So this idea that you've got the 14% or 16% who are seeking advice, which means that there's a huge, over 80% of people aren't seeking advice.
Correct.
Do you see AI as actually helping there, that something is better than nothing?
To me, I was going to say I'm sitting on the fence with AI, but I'm more positive than negative. The positive is exactly what you're saying. Nowadays, mum and dad, if I use that broad term, have access to information that only the rich people had or the institutions had. Now it's leveled the playing field. So they've got all this great information into there. The challenge with AI is that you can't trust it all the time.
No.
So you need to understand yourself.
But I think that we're getting a better handle on that, right? We're getting a better understanding every time we use it of that can't be used, that's hallucination, that doesn't make any sense. As we get better at this and as it continues its march, the obvious question is, what happens to all of these financial advisors?
Well, we're going to see a lot more robo-advice. We're also going to see a lot more of the stockbrokers and other industry bringing in AI into it. So like, here's your automated portfolio. It'll trade for you. That's what it'll do. That's good and bad because we start trusting it too much, and that gives us a cognitive bias saying that we're just because you did it, Aaron, I'll do it. You must have done the research.
Not to mention the security, obviously, of telling a robot or a computer that you don't own your entire financial history.
Correct. To me, you need to know yourself and keep asking the questions all the time. If you just leave it up to AI, you're going to leave yourself in a problem, especially when the next stock market crash comes.
Yeah, well, that'll be an interesting one as well, because everything is different, obviously, in the world of finance, even if it feels like it is somewhat of a cycle. We've got to leave it there. Really appreciate your time, Dale Gillam from Wealth Within. Great to have you on the ticker set.
Yeah, I love being here. It's great fun chatting to you and then chewing the fat, as they say.
We'll see you every fortnight. Thank you, sir.